Hey, Andrew here with Smarter HSA. I'm going to go through how I review a health plan. So just going through the key things to focus on, because a lot of times people get a little bit sidetracked focusing on the wrong things. So I'm going to review the specifics here to look at. This is a traditional plan, so this is a plan that has a copay. So if you go to the doctor or there's prescriptions, so it's not a high deductible health plan that you can have an HSA with. This is just a traditional, straightforward plan. So the first thing that I want to look at when I'm looking at a plan is premium. So how much I'm actually paying as the employee versus the total premium. And usually in your benefits statement, it will show you something about what you actually have to pay. So in this example, say I'm on a single plan, don't have any dependents that I need to cover. So in this example, I'm going to pay $200 a month out of my pocket just to have the plan. So you're going to pay this whether you use the health insurance or not. So in this example, $2,400 a year, we're going to pay in premium whether we use a ton of health insurance or we have a lot of bills or we have no bills. So either way, we know for sure we're paying that. The next thing, and this is what gets people a little bit confused, so deductible we can see is $1,000. Sounds pretty good. So when we have a bill, say we get an MRI or a surgery, the first thing we're going to have to pay before the insurance is going to help us pay anything is that $1,000. Once I've paid that $1,000 out of my pocket, you can see in this example there's a co-insurance. So not all the times, but a lot of times there's going to be some type of a cost share between you and the insurance company. So in this example, once I hit $1,000, everything after that point, I'm going to pay 20% of the bill as the employee, and the insurance company is going to pay 80%. And that 80-20 is going to continue all the way up to once we've paid $4,000 out of our pocket. So instead of focusing on this, a lot of times it's more important to know what this number is. This is the most that I'll pay, worst case scenario, before the insurance company pays 100%. So everything after $4,000 out of our pocket, 100% paid by the insurance company. Now, if you have any type of office visit, doctor visits, in this example, every time you go to the doctor, you'll pay $50. Prescriptions, there's typically going to be 3 or 4 different categories of prescriptions. So there's going to be a generic, preferred, specialty, something along those lines. But basically what that means is generic is going to be extremely cheap. So whenever you can get a generic drug, you should, because the copay is going to be $10. If the drug is less than $10, you'll just pay that number. So if you have a drug that's $6, you're not going to have to pay the $10, you'll just pay the $6. So when we go to determine what our best case scenario and our worst case scenario is, it's really just taking a look at the numbers. So if we have no medical bills throughout the year and we just pay the premium, that's our worst case scenario, $2,400 just to have the health insurance. Worst case scenario, we're going to hit our max out of pocket of $4,000. So if we add the $4,000 to the $2,400, $6,400 is our worst case scenario. So, and anywhere in between. So that's how you can determine your risk and real quickly determine which plan is correct for you. So hopefully that was helpful. Let me know if there's anything that you would like answered in relation to when you're looking at a health plan. Thanks for joining.